Hello, everyone, and thank you for joining us today, where we have part 2 of PPP round 2. So last week, my guest Neil Seid and I, we kind of broke down the new PPP round 2, the second draw, as it's called, package, kind of just a high level guidance. Also last week, late Wednesday night, the SBA did provide some additional guidance. So some of the things that couldn't have been answered last week can be answered. And then more specifically, late Friday last week, the SBA actually released and published the actual loan application. So at a glance, it's simple, but as Neil and I talked through last week, the devil is always in the details. So I want to welcome back this week my guest, Neil Seid. Neil is the principal at a financial advisory firm called Asset Enhancement Solutions, AES. And AES specializes in debt financing, equity financing, really I'd say mostly for companies, maybe not mostly, but they definitely have a specialty in helping companies that have challenges. One of the reasons why I'm so excited to have Neil as my guest last week and this week is he's a real expert on PPP loans. His firm did over 800 PPP loans in the first round. It's probably going to be 2 or 3 times that in the second round. They found over $100 million for businesses and nonprofits across 30 states in the first round. And as a result, he's been interviewed in ABC Eyewitness News, News 12 Long Island Business Review. He's been quoted in New York Times, Newsday, Long Island Business News, and he's a frequent speaker and a panelist at symposiums in all kinds of guest appearances. He's a past president of the Long Island chapter of Turnaround Management Association, past president of the Long Island chapter of Institute of Management Accountants, and he's currently on the board of directors for the Mid-Market Alliance of Long Island. So, Neil, welcome.
Thank you, Michael. It's a pleasure to be with you again, and it's going to be a lot of activity next few days with PPP.
It sure is. So Neil, I want to take a little bit of a different approach for our guest today. So last week was a bit of a conversation, right, where we try to unpack, what's in the new law, what's not in the new law, so some of the high points. But now that we got a bunch of clarification, I think it's action time, right? In fact, this is action week where applications are flowing. So I'm probably gonna ask some questions and some clarifying questions, but I'm gonna give you the floor much of today. And Neil's gonna walk us through literally how to calculate the information that goes on this application. Before I jump into the slides, Neil, what can you say about timing, timeline, when banks are accepting applications, when SBA, the early window for disadvantaged businesses, and when you think money's going to start flowing?
The SBA, this past Monday, small community banks started making loans for the first draw. Wednesday, they allowed second draw. Friday, they're opening it up to about 5,000 banks that have a certain minimum amount of $1 billion of assets. And on next Tuesday, after the Martin Luther holiday, it's going to be open to all banks. So we actually have Asset Enhancement. One of our banks is a community bank, and they've been taking apps since early this week now. So the chaos will start really next Tuesday.
Yeah, very good. Okay, so I'm gonna give the floor to you here a little bit, Neil. Let's first, before we jump into how to calculate fields that everyone's going to need to understand to fill out their apps, because I think that those applications, they look deceptively simple, but there's a lot that goes into calculation of a single field. Do some compare contrast for us in the changes to the PPP program round 1 versus now.
Sure. The middle column is the information that was appropriate in the first round between April to August. The right-hand column is what's happening now and the new rules. And to get a second PPP loan, you need to meet a 25% revenue reduction test. So if you don't meet that test, you cannot get a second PPP loan. And we're going to discuss that in detail in a little while. The maximum loan you can get this round is $2 million versus $10 million the first round. If it's a single corporate group under the same ownership, the max you can get is $4 million versus $20 million the first round. They have added additional eligible nonprofits in the form of certain 501c6s, such as chambers of commerce, housing co-ops, as well as a few others. The period in which to use the funds is now between 8 to 24 weeks. The maximum number of employees that are targeted are for companies with 300 or less versus 500 the first round. And what we're going to see from the change in the rules, Mike, is an emphasis on smaller businesses as well as additional documentation. And we believe the additional documentation requirements are to prevent fraud, because there was a lot of fraud during the first round, and there's requests for additional documentation in order to avoid that fraud. In terms of the calculation, the multiplier used to multiply against the average payroll remains at 2.5 times, but has increased to 3.5 times for companies in the hospitality industry with a NAICS code of 70, starting with a 72. The SBA, it wants people to be able to maximize. So really the SBA, for companies that are legitimate and eligible, they want companies to be able to maximize their loans and also to maximize the forgiveness. So in order to maximize the loan, this time they're letting companies use the higher of the average payroll in 2019 or the average payroll in 2020. So we encourage people to test the calculation on both payroll amounts to make sure you maximize it. With respect to forgiveness, it's the same percentages. They want you to spend 60% at least on payroll related costs, and they have increased the types of expenses that can be used to get forgiveness. If you don't get a total forgiveness and you need to pay the loan back, you could pay it over this time 5 years versus either 2 or 5 years last round, depending upon the time you got the loan. So if we go to the next slide.
Yeah, Neil, just personally, I'm super excited about a couple of these changes, right? So that businesses can now expense PPP equipment, the barriers, the shields, the masks, etc., are now expensible, because this is really crushing some small businesses. So some great news is in this round too.
So for those who did not take a loan the first time, where this would be their first PP loan, the rules are pretty much the same, with the exception of the items that are colored here in red. And we kind of reviewed these. So it's in basic terms, it's everything's more flexible in terms of forgiveness and in terms of eligibility. So with respect to first timers, the amount you can get is the same amount where I discussed on the previous slide, where the maximum loan amount was $2 million. That is only for people seeking the second draw. If this is your first draw, the government is trying to basically even the playing field and pretty much provide the same terms to people on their first draw now as to what it was previously. So let's go to the next slide. So, many people, we talk about the devil is in the details. And what we want to do here, Mike, is to make sure that when people are putting in the payroll, the average monthly payroll amount, I want to make sure they're doing it correctly. So if we go from the top, what you're going to do is you're going to take your average monthly compensation which will be the average monthly payroll either in 2019 or 20, which is ever higher. You're going to deduct the excess comp for people making 100,000 or more. Now, the items colored in red, I just want to highlight for people because they may have excluded this the first time as they were rushing. So in the definition of eligible of payroll, average monthly payroll, it includes compensation, but it also includes employer paid healthcare costs, as well as employer paid retirement contributions, as well as the state and local taxes that were assessed on employee compensation. So those local taxes, that's not FICA taxes or withholding taxes. It's primarily the state unemployment taxes. So going back to the healthcare costs, so these costs again are part of it, and you can see the average monthly compensation, adjusted compensation, was 226,666, but we're going to add to it these average healthcare and other costs times a 2.5 gets you your loan amount. Okay, so it's very important. You can increase your loan amount by including these employer paid costs. And we're now going to go through on the next set of slides to show you a good way you may want to summarize those costs. So if we go to slide 7, please.
Very good.
Okay, so here, what we did just before we get into the detail of the healthcare is just to show you we have a little analysis here where we're comparing the average payroll for 2019 and 2020, and we took, as you could see, the 2019 payroll in the previous slide of 243,333 because it's higher than the 2020 payroll. And most companies will probably have a higher payroll in 2019 than they had in 2020 for obvious reasons. And in many cases, people will be using the same information that they did now for the same information as they used for the first loan. So if we go to the next slide.
And Neil, this is just straight line math, right? It's the top line, it's the overall payroll divided by 12 for each year. It's not like months open if you're in a shutdown or anything like that. It's real simple, right?
That's correct. But one thing to be wary of is depending upon how many months you may have been in operation in each of these years. If you're only in operation, 10 months, you got to divide it not by 12 but by 10. Otherwise, you will understate your loan. And we saw a lot of cases of that the first round, and people were unable to get that adjusted.
Yeah, very good.
Sometimes it's Mike, there's funky things, and they should reach out to an advisor when there's something funky going on.
Yeah, and just to call out in the upper right, so Neil's got all kinds of tools if you guys do choose to use his firm to help you calculate all this stuff to plug all this in. But at the end of the day, you really whatever your accounting systems, your payroll systems, it's calculating this stuff, making sure you're putting the right things, and then simply printing those reports and saving them as PDFs so you get the proper documentation. Anything you'd want to say on documentation?
Well, with that on next slide, we'll cover that.
Okay, great.
So this is just a sample of a worksheet we developed to help calculate compensation of excess of 100,000. You could do it our way, or you could do it your own way. Our templates are available on our website. Next slide.
Hey, Neil, real quick, just so everybody understands, because we had a ton of questions round one on this. Just speak to the in excess of 100,000. So this is not you have to exclude those employees who make more than 100,000. It's excluding the portion of their income that is their compensation over 100,000, right?
That's correct. So and it's only the compensation in excess of yes. So basically, if you take 100,000 divided by 12, it comes to 8,333, which is the allowable monthly salary or compensation for a person. If you look at the example here, Jill Baker, if she's at 175,000, that comes out to 14,583 a month. You take the difference between those two numbers, the 14,583 and the 8,333, it comes out to 6,250. So you would deduct the 6,250 from the average payroll to adjust it for the monthly excess of over $100,000.
Yeah.
And then, so we have different amounts, so you can see the differences. And what you do is you add up all those differences together. In this case, it comes out to 16,667, and that gets subtracted from the total average payroll that was calculated in the previous slide. So if you wanted to go back to the two or three slides and you see the calculation, you will see the 16,667 being deducted from the gross salary of 243, I believe.
Very good. We heard that question a whole bunch last spring and summer, so thanks for the clarification. All right, now to documentation.
Okay, so as I mentioned, to avoid fraud, they're looking for a lot of documentation. So here are two things. A, if you are paying different types of insurance for your employees, so this is employer paid group health insurance, and it includes typical health insurance, group, so the premium, these are the premiums that you may pay to your provider on a monthly basis. Group life, it includes disability, vision, and dental. We have a template, and as you can see in the template, we took each plan, we put it in a separate column, we put the monthly cost in the appropriate cells, and in some cases, the monthly amount was the same amount. In other cases, it varied. What we encourage you to do, this is very important because they're looking for this documentation, is to scan in all the, in this case, let's use this example, Oxford Insurance is an insurance company here in the Northeast. They charge monthly premiums. We encourage you to take out all your Oxford bills, and where on the invoice it says $21,811 for the month of January, we encourage you to scan that in along with all the other invoices. Do the same for the dental as well as the vision, any other insurance invoices, and then consolidate all those invoices into one PDF with this summary sheet or your own summary sheet on top of all those PDFs. And then when it asks you to load the backup for your healthcare costs or for your payroll, you want to include this sheet as part of that. This way, it makes it very easy for the person that is reviewing your application to approve this. If you make it very complicated, if you just scan in the invoices, and if you're going to leave it to them to add up 12 months times 4 different policies, so let's say 48 different invoices, I don't think that's going to happen, and it may be inaccurate, or they may kick it back. They don't want to do that. So the best thing is for you to do it for them. The other important thing on this chart is that it's employer paid healthcare. So you see here at the bottom, underneath gross company paid, so that's what the company paid, but many employers have their employees paid part of it. So you need to deduct from the total of 140 the amount that the employee has contributed. You can get this amount whether you're using 2019 or 2020 from probably the annual reports or your last. Well, you tell me, Mike, where would somebody find this? This is your business, the employer contribution portion.
Yeah. So it's simple standard register reports with Assure, and if you're with any of the standard providers or using any major in-house software, this is going to be standard library stuff.
Right. So Again, all right, so we'll go to the next one. It's basically the same. So I'll repeat the need for good documentation. Very similar template. This time it's for retirement benefits. You put in the monthly numbers per plan. You need to deduct, as you could see, the employee contribution that was made, and you need to provide the backup for each month's expense. You should consolidate. You should scan in each of the invoices if you have a hard copy. Otherwise, consolidate it all into one on Adobe. If you need software to consolidate the PDFs, we have software that's available for free on our website. Adobe and other companies provide limited time access to consolidate PDFs. And again, the more organized. Again, we like to present the information with a bow around it so that there's no questions asked. You want to make it as easy as possible for the reviewer of your application. And just
yeah, Neil, I think that's so important, right? You've talked about last week and this week. I've talked to people who didn't get the loan amounts they expected, even though they did in fact have the documentation. But just imagine you're a banker, you're flooded with these applications. Somebody sends you 50, 60 different documents, and the name of these documents is scan underscore blah blah blah, some long alphanumeric string that you don't even know what that means, versus the name of the file is 401k January 2020, right? It just as simple as having naming conventions of these PDF files, and then further to Neil's point, if you can consolidate these things into a single document so that the bank can see, okay, here is one long PDF of just their 401k documentation. Here's another one of just their health insurance. Any other guidance you might give or underscore the importance of this?
Well, Michael, it's a credibility issue. When just in any aspect of business and life, if somebody sees something that's very organized and methodical, they're going to believe that it's correct and that everything else that's being submitted is correct. So, I encourage people to do it the right way. And if there's any questions, they should reach out to us and we can give them some advice.
Yeah, that's good advice. A shoebox full of receipts may in fact be 100% accurate, but you're walking in without the credibility of just a professional presentation. So, okay.
And the next is the same similar template. And this one is for the employer, state, and local taxes, the state unemployment. This information you will get from your, well, actually, you could tell us, Mike, it's from the state payroll reports. Each quarter of the state report will have the amount of state unemployment taxes paid. And this, so example, if you left this out, it's not a huge amount of money, but it's, if you take the 1,555 times 2.5, that equates to the PPP loan amount that you would get on this cost component.
Yeah, I think this is just your standard 940, 941 quarterly returns. This is easy stuff, but even though it's not the state taxes, to your point, Neil, it's not huge expense. It would be silly to exclude it from the calculation. We are not here to help anybody game the system or steal taxpayer money, but this is a program designed to help people, and we want to help you maximize how much help is available. So by all means.
So so using this get somebody an extra, rounded up to $3,900 PPP loan that they won't have to pay back.
Yeah.
So every bit counts.
Yeah. Okay. You think how much time and effort would go into preparing the documentation for that? Nobody on this call today would ever just walk past $3,900 and say, that's not important to me, right? So put
just a few more minutes. And again, as we keep on saying, the devil is in the details with this stuff.
Yeah, that's right.
Okay, so independent contractors and sole proprietors, these are people, or single member LLCs. These are people that typically will get 1099s from their customers and their clients. As we discussed last time, 1099s are eligible for a PPP loan. Anybody that files a Form 1040 Schedule C, that on line 31, which is called the net profit or loss, that has a positive number, is eligible. And basically, the way a loan is calculated for independent contractors is you take line 31, you divide it by 12, and you multiply 2.5. There's a cap on it of 100,000. So the largest loan that an independent contractor can get without employees, if they don't have employees, is $20,833. Now, the difference in this round for independent contractors, whether it's your second loan, second draw, or first draw, is that they want you to substantiate the revenue amount that's on line 1 of the Schedule C. So if we look at this, line 1 is $125,000. Okay, what happened last round with respect to independent contractors, the only document that was required to substantiate the calculation of the loan was this form, which is the Schedule C. The Schedule C is prepared by either the individual or their tax preparer. On the other hand, people that have salaried employees had to present payroll reports, whether they were 940s, 941s, or W3s or W2s. So what they've done is they want to now put a little burden on independent contractors. So they're asking to back up the revenue number is they want to see 1099s. Now, if you have one 1099 for 125,000, then you could just scan that and you're going to be asked to upload backup for the revenue on this. If you have multiple 1099s, as you could see from the previous summaries, what you want to do is make it easier for the reviewer. So you should summarize the multiple 1099s you have by company that gave it to you. You indicate the amount that you received, you add it up, and hopefully it gets very close to that $125,000. If you cannot get to that number, then you need to provide some other documentation to get to that 125. That could be your books of record, which is your sales journals or your other accounting records, could be actual invoices or bank statements. If you don't have 1099s at all, what you want to try to do is use bank statements to substantiate that revenue number. But you want to get what you need to do, yeah. So that's what you got to do, is get as close to the gross revenue number as possible.
Neil, am I thinking about it right? So this is, we're sharing SBA guidance. You know, you pour through the SBA literature. I know. At the end of the day, this is still going to be kind of bank by bank what they find acceptable for documentation. Is that accurate? That's correct.
Every bank is a little. The SBA gives you the guidelines, and each bank interprets it. And some banks are tougher with documentation. Some are a little less stringent. I read through the literature a few times from the SBA, and they want to be able to, I'm using these words. They want you to substantiate the revenue information on the revenue line.
Yeah. So guys, this is largely based on, I'd say even culturally in the risk tolerance of a bank. The reason a bank might not like these loans is they might not have the opportunity to make tons of money on loans like this compared to other services they provide, but they do like these loans because they're guaranteed that they're gonna get reimbursed for making these loans from the SBA, from Treasury. But most banks are not gonna put their neck very far out on the line So that's really the backstory of why there might be some variability in how much detail and documentation these banks provide, request of you, because they know that they have to, they don't want to do a PPP loan that's not going to be forgiven. They want to de-risk themselves in these deals.
Agreed, because I was just talking to one of the banks that we worked with the first time, and there was a change with respect to the $10,000 or less grants on the idle loans that are still on their books. And the last thing they want to do is have to look after and service loans that are under $10,000. So they want to get this off their books as quickly as they can.
Yeah, and for something that has nothing to do with the legislative intent of PPP loans, right? It's more just these banks are independent businesses and they have their own business strategy that they need to follow. So.
And it's just, and you know what the banks are doing pretty much, you know, and I think we may have touched on this last week, or I discussed it in another webinar, but what the banks are doing with PPP, the banks are being used to deploy the money on behalf of the government, and the government is sending out the stimulus checks, but in order to get businesses the money that they need in order to continue to pay salaries, this is the best way to do it. And I equate it with the way the federal government has sent vaccinations to the states for the states to distribute. So, yeah. And this is how the money is being deployed.
Yeah, there's no way one single central body could ever process all those applications. They have to use the money distribution network of 5,000 banks. So, yeah, well said. Okay. Additional documentation. Go ahead.
So again, to eliminate, reduce fraud, they are requiring if you are basing your loan on employees, you need to provide a payroll report for the pay period that included February 15th, 2020. Whether you do a weekly or bi-weekly or a bi-monthly payroll, you need to give them this report so that they know you were in business as of 2/15/20. If you're an independent contractor, chances are they may want to see a bank statement or some other documentation also from February 15th, 2020 to make sure you're in business as of that date. So we can go to the next.
Yeah, so just real quick on this, I know there's been frustration amongst some in the payroll world. So we sit on an advisory board along with all the other major players in the payroll industry that helps advise SBA and Treasury on how to implement policy. And the reality is SBA doesn't say, hey, everyone must submit their payroll register, and the payroll register must have XYZ components, or everybody must prove to the bank using their 940s, 941s. The reality is it is somewhat ambiguous, and certainly Assure does it to help people, but most major providers, there's a handful of reports, whether it's your quarterly returns, it's your payroll reports, your standard payroll register. I would suggest attacking this, giving the bank some summary information. Hey, here's the big picture during the overall period. Here's how much we spent on payroll in a summary fashion. But also then you can, any of these providers, certainly Assure can give you the employee by employee, paycheck by paycheck. And it's unlikely, in my opinion, that a bank is literally going to read, the loan process is going to literally read every single page of this. But if they can see that, yep, you've provided this level of detail and the numbers tie out and it underpins, all it does is further strengthen your case. That it shows that, hey, you're not making this stuff up. It's got the vendor's logo and name right on. So you didn't create this in Microsoft Word yourself, that you're supplying the detail. But any commentary there, Neil?
I agree 100% with you.
Yeah, okay. Here's some real meat. Take us through the reduction in revenue, and I think there was a lot of question early on, what the hell does gross receipts mean?
And we're going to discuss what they mean on the next slide. Yeah. But again, to be eligible for a second draw, second bite of the PPP apple, you need to show and substantiate a reduction of at least 25% in revenue / gross receipts in one quarter in 2020 versus the comparable quarter of 2019, or you could show it on an annual basis. So, okay, here's the caveat. So that's one thing. Okay, you need to have that reduction. For loans of PP loans of less than 150,000, the lenders may not require this documentation that you need. You need to document this, but if your loan is less than 150,000, you may not have to document it at the time of application, but you'll need to document it later on before you apply for forgiveness. On the other hand, if you're applying for a loan greater than 150, you have to provide the adequate documentation now at the point of application to demonstrate the 25% reduction in revenue. So what you need to do is, and there's various ways to do it. So you can show them a quarterly financial statement for, let's just take, from argument's sake, let's take a look at the third quarter. So you want to take the financial statement for the third quarter of 2020, which is July, August, and September of 2020, and compare it to a income statement for July, August, and September of 2019. If the revenue is lower by 25% or more, you qualify. You could use the documentation. You could use, if you're a retailer or someone that collects sales taxes, you could use sales tax returns. You'd want to present sales tax returns for July, August, and September of 19, and for the same months in 20, and compare them. Again, don't just give them the sales tax returns. Summarize the information. Well, we have templates for that. You want to summarize the information, show the dollar difference, show the calculation of the percentage. You can also give them bank statements to accomplish the same things, or your tax returns or any other tax returns you may have had to prepare. So again, we see the request and the need to provide this documentation. And we believe, people are going to, oh my God, what am I going to do? But everybody has bank statements. You may have more than one bank statement. You may use it for different purposes, but these are for bank statements where you are collecting money from your customers.
Neil, this is one of the areas that I had questions myself early on. It's like how, payroll costs are easy to substantiate because by law you're filing, quarterly employer returns, right? But for revenue, you got an annual tax return. You've got quarterly sales tax. But if you're a business that provides, if you're a hair salon and you sell, shampoo, conditioner, you get sales tax reporting, but you don't maybe have it on the services that you provide for clients. One of the things, what do you think? I'm assuming there's going to be additional IFR's interim final ruling documents is going to come from SBA. That if I think 24 weeks out from now, you're half a year out, we're going to be past tax season. Do you think that there'll be actual tax returns will be required to substantiate when it comes to forgiveness, or is that just too speculative?
Well, I think that's quite possible, but so this test is on a quarter versus quarter, but they're telling you could also do it on an annual basis. So you can look at total revenue for 2020 versus total revenue for 2019. So for 2019, you would have filed your 2019 tax return already. So that's one benchmark that's really done. If you wanted to compare it on an annual basis, you have that number. If you're able to complete your tax returns very quickly and file it, you can compare your 2020 tax return to the 2019. That would be the easiest way to do it, but that means you got to get your tax return now. Most people don't do it so quickly.
Yeah.
So what you can do is you can, if you want to compare annual numbers, you could use the 2019 tax return, and then you could put together your revenue numbers for 2020 from different sources. It could be the sales tax returns. It could be other tax filings you may have to do for your industry. It could be your annual internal financial statements, or it could be 12 months of bank statements. You add them up and you compare it to the gross revenue in your 2019 taxes. Or if you want, you could take out your 2019 bank statements and compare them to your 2020 bank statements. So there are multiple ways to do this. And I agree that what will probably happen is there will be additional FAQs, frequently asked questions, that get issued by the Treasury and the SBA to minimize the issues and questions and the problems that people are having with this. But I can tell you that bookkeepers, accountants, both internally and externally, are going to be very busy assisting their clients gather this information. But if we go to the next slide, we'll discuss what revenue means.
Yeah.
So the gross receipts is the term that they use, and that term, the term gross receipts is really used also on tax returns. And basically, they're saying you should use, whether you use the term gross receipts or revenue, you should use the methodology that you utilize on your tax returns in order to, for purposes of the test. Methodology with respect to the accrual basis or the cash basis of accounting. And your tax return, either on page 1 or page 2, will indicate with a check mark as to what method you are using to prepare your taxes. So you should take a look at your tax returns, and if you use the accrual basis, you want to use that basis to compare and legitimize your eligibility on the 25% test. If you use the cash basis, that's the way you want to do it. With respect to gross revenue, you basically take your revenue less any sales returns and allowances. So it's really your net revenue. What you do not include in your gross receipts are any taxes that you remitted on behalf of a taxing authority, such as sales taxes, or any amounts and expenses that you may collect on behalf of a third party. For example, people that are travel agents and ad agencies and freight forwarders will often bill their customers either in advance or whenever, not only for their commission, but also what's called the pass-through expense, the cost of the airfare and the hotels, or in the case of an ad agency, the cost of the radio or the television advertising or the digital cost. With a freight forwarder, it would be the cost of the freight. So, or a customs broker, it's the fee, the customs fee for the tariffs that have to be paid to the government. So, for example, the freight forwarder, you may have, you may invoice a company, a client of yours, $10,000, and it'd be $9,000 would be the tariff that's going to the government, and only maybe, let's say, $1,000 for their fee for the brokerage house. So they're saying only show as revenue the $1,000. But as long as people are comparing apples for apples, then they'll be fine. Okay.
Neil, what about service industries where some I've seen some system reports that include, so like if you're a restaurant, tips, right? So tips, that's not, is it taxable income? Is it not? Is it?
So that would not be, so that would be similar, that would not be income. I don't believe that would be income, but I'm not 100% sure, to tell you the truth.
Okay.
I can tell you that the tips, yeah, I'm not 100% sure, but with a restaurant, as long as people do it the same way for both years, you know, whether it's a tip or not a tip, they'll get to the correct percentage.
Yeah, that makes sense. Okay, very good.
And what gross receipts do include is, for example, a contractor who is working for a customer, to the extent that they're purchasing materials and then billing their customer, the total amount of that billing would be included as part of gross receipts, as would investment income as well. And lastly, with respect to an independent contractor, you want to look at line 3, which is the gross receipts and revenue less the sales and allowances, returns and allowances. And because you as a independent contractor looking for a second draw, you also need to be able to, you're only eligible if you have also a reduction of 25% in revenue, but because your loan will most likely be below $150,000, you may not have to provide that documentation until you've asked for forgiveness on the PP loan. So we can go to the next.
Yeah.
And we covered this last time, and we put this slide together, and I thank you for making me create this slide. And this is really for companies that were not in business all of 2019. So if you're in business all of 2019 and all of 2020, it's easy to make that comparison quarter for quarter or year by year. But if you're not, there's a little chart here, and there's templates to follow that show you what comparisons you're going to make. So we'll look at the first one. So if you were not in business the first quarter or the second quarter of 19, but you were in business the third and the fourth quarters, you're going to compare any quarter in 2020 to either the third quarter of 19 or the fourth quarter of 19. Okay, and this was included in the Treasury documents as to how you're going to make these comparisons. And we put together on the following 4 slides, or the different templates, to accommodate the 4 different ways to look at the 25% revenue reduction. So if we can go to the next slide, Mike. Okay, looks like we're missing some of this, but here you would compare the quarterly revenue for any quarter from, this is an easy one, from 19 to 20, or on the annual basis. Next slide. Okay, great. So here you could see, this is the first example I mentioned earlier, is where you were not in business the first quarter or the second quarter of 19. So you're going to compare any quarter in 20 to either the third or the fourth quarter in 2019. So if you populate all the boxes in green, you will get calculations of what the difference was in revenue per quarter. If any of those percentages is 25% or greater, minus, you will qualify for the second draw. And if we go to the next page, this is if you were in business the fourth quarter of 2019, but not the other quarters. So you're going to compare each quarter in 2020. You can compare any quarter in 20 to the fourth quarter of 19. Again, you fill in the green boxes. Anything that's minus 25% or more will make you eligible for a second draw. Next slide. This is if you were not in business at all in 2019, the comparison will be either the second, third, or fourth quarter to the first quarter of 2020. Now, here you had to be in business before February 15th. So really, this is an easy comparison. So you're in business February, let's say you're in business February 1st, so you have sales for February and March, the first quarter. You're going to compare that quarter to any quarter in the second, third, and fourth quarter of 2020. And if those any of those quarters are less than your first quarter, you qualify. And I think there might be one more.
No, that was so. I got a question. So, but it's not just a decline. It still has to be the 25% or greater, right?
Correct.
Yeah, even if for new businesses. Okay. So talk modifications.
Yep. So what the new legislation that passed about 10, 15 days ago did, it kind of corrected certain things that maybe didn't happen the correct way in the first round. So people who returned all or part of their original PP loan could reapply for an amount equal to the difference between the amount that they actually kept and the maximum that was actually allowable. So you could modify at this point your original first round loan. And if you didn't accept, so in the first instance is you returned it, but here if you did not accept the full amount, in which you were eligible, you can request a modification to increase it to the maximum amount permitted. So someone came to us after they applied with one of the big banks, and they applied early in May when the forgiveness period was only 8 weeks. They felt they didn't want to get stuck with the loan. They were eligible for $250,000, and they only took $150,000. So they left $100,000 on the table. So they now have an opportunity to go back and get that extra $100,000. Okay.
Neil,
Go ahead.
I got a question on that. So when I was reading the SBA updates from late last week, I know it's not mutually exclusive to go back, and then in your example, that person could go back and get the money they left on the table. But isn't there a sequencing here that you have to have paid back all of the money from round one before taking a second draw on this round two, or do I have
that is in addition to the 25% rule to be eligible for a second draw? You have to have either used the money on the first draw or going to use it before you receive your second draw. This here would be some exceptions to that, Michael. And the chances are that these people may, even though they didn't get the money, they still may have used it. So, so this is a variation of that rule that you just mentioned.
Yeah, okay.
You could also get a modification if the amount that you would have received, you got a certain amount, but if subsequent FAQs that came out would have increased that amount, you can go back and get an adjustment into the into what you received if certain FAQs came out that would allow you to get additional money. And lastly, if your EIDL grant was deducted from your forgiveness application when you applied for forgiveness, then you can also get that money forgiven from the bank as well. Okay, so they're trying to make up for some of the sins of the past, so to speak. Yeah. Also, with respect to sins of the past, there was confusion for the last 9 months as to whether the expenses that were used to calculate the loan would be tax deductible. And as we discussed last week, they determined that all those expenses would be tax deductible, and the effect of not having to pay the PPP loan back because it was forgiven, you do not have to include that in income and pay taxes on that gain either. Okay. And as I mentioned, EIDL grants did not need to be offset against the PPP loan that was received or affect your forgiveness. And another thing that can be used retroactively is they have made additional expenses eligible for forgiveness. So if you had a problem in being totally forgiven, you could, these additional expenses, if you had incurred these additional types of expenses, you could do this on a retroactive basis to help you with your forgiveness.
Neil, is there anything there anything that small business owners need to do to get these idle loans pulled back? So if they've already gone through the forgiveness process, and in many cases have already then paid back these idle the idle offset, so to speak. If you had a $100,000 loan and a $10,000 idle, you paid back, you were forgiven the loan, but you paid back the 10,000. How do I get that money back if they already paid it?
I think you in the it's a good question. I'm going to have to get back to you on that. You might be able to include it, add it to this PPP loan. There's a provision for that. If you got that, yes, I believe those grants were. Yes, I believe those grants were given prior to April 3rd. So
yes,
in the PPP application, if you have any leftover grant money that was not forgiven, you can add that to the amount of the in the applications. You're able to add that balance to your current PP loan, and in that manner, it will get added to the loan and will be eligible for forgiveness.
got it. Okay. You may advance.
Yes, please.
Okay.
Okay, so there's a few esoteric guidelines that were included in some of the FAQs that we actually helped a number of companies get approved because we're familiar with this. And I just want to share it with some people because some people may benefit from this knowledge. It really relates to the people in the first draw. If you have over 500 employees and you're in a first draw, you might think you're not eligible. We had a case of somebody that read some of our literature that said if you had certain companies with over 500 employees could be eligible. So they reached out to us. They had 1,200 employees, but they met the SBA's alternative size standard, which is saying that if their tangible net worth was $15 million or less on March 27th, and they had an average net income of $5 million or less for the last 2 years, even though they had more than 500 employees, they're eligible for the PPP loan. So, there's not a lot of companies that, that maybe relates to, but I just want to point that out. And the next one is.
But Neil, if I could, and I'd give you an opportunity to brag, because I think you have a really cool success story here, right? So that there's not a lot of big, because you think over 500 employees, that's a big company, but so there's not a lot of big companies that, 5 million sounds like a lot to a solopreneur, but it's not for a really large company. But if you're, say, a retailer, right, who's been working on laser thin margins for years and watching the brick and mortar retail business just, really struggle for obvious reasons, there are pretty good sized companies who legitimately need the help to help keep those employees on the roll, right?
That's correct. I can tell you, everybody may think that a company is big, they're profitable. We specialize in companies that are not profitable. And the particular company I was just talking about with the 1,200 employees, they were a staffing company. They had very thin margins. They don't make a lot of money every year. They did not have a high net worth, and that's why they were eligible. And you talk about success stories. The CFO of that company happened to read our email, which was educational, like we're doing now, and they got $7 million because he reached out to us. They got $7 million. That was all forgivable, and the guy was a hero for his company because it turned out that their revenue was not really affected by COVID. Because they serviced the food industry, which did very well. And so that money, that $7 million will probably be a big profit for the company and really be able to help the company for years and years to come. So the next major item will affect a few companies, and we keep on talking about the February 15th, 2020 date, and which is the date company needed to be in business to be eligible. But what happens is companies get bought and sold. So if there was a change in ownership after 2015, so if somebody purchased or a company purchased another company in, let's say, March of 20 or April of 20, and that company was in existence prior to February 15th, they're operating, they buy them, they can get a PPP loan. So we had a situation, somebody had reached out to us in early May. They were owned by an investor that just purchased a company in March of 2020. They went to a regional bank here in the Northeast. They got turned down. The bank said you were not in business February 15th. They reached out to us. We said, how could these guys not be eligible? And we read the regs, and we got the SBA involved, who helped us. And there was an FAQ number 38, which addressed this exact issue. So basically, it said that an acquiring business can rely on the historical payroll and headcount of the pre-sale business, assuming that the business was and everything else was pretty much the same. So we had a number of cases where people bought businesses and they were eligible. So we even had a situation, Michael, where a company was owned by a private equity firm, and because of the affiliation rules, they were not eligible for a PPP loan. What happened was the company was sold very late in June. I think it was like June 27th. The program expired, or this might have been in August, but whichever maturity date, whether it was June 30th, the first round, or August 8th, and I think it was close to August actually, company was sold to either a person or a business, and because they did not have to worry about the affiliation rule, which would have made them ineligible, they were now eligible for a PPP loan by the acquiring company, and they got over $1 million. So they never would have had that $1 million if they were still owned by the private equity company. So it's very interesting how things work out sometimes.
Yeah, devil is certainly in the details.
Yep. Let's look at the next.
Yeah, here's the big punchline, right?
So, yep. So question is, what is the likelihood of the loan being forgiven? And we share this with people because we want to educate people not to be afraid that this is a grant. This is really a grant that their loan will be forgiven. So you're getting 2.5 times your average payroll. What does that come out to in terms of payroll weeks? It comes out to 10.8 weeks. If you're in the hospitality industry and you're getting 3.5 times the payroll, it's 15 weeks. The forgiveness period is up to 24 weeks. So if you get the PPP, and if you actually continue in business and to pay these people for 24 weeks, then you only, so basically you're getting the loan for, let's say, 10.8 weeks or 15 weeks, and you're paying people in your business for 24 weeks. So right there, you're going to be totally forgiven. And the new bill also expanded the different types of expenses that you could use for forgiveness to make it even easier to be forgiven. So, it's in all likelihood, the loan will be forgiven. Okay, Michael, so following are the additional types of expenses that could be used for forgiveness. The original, just to remind everybody, the original forgivable expenses were payroll-related expenses, rent, insurance, and utilities. This list has been expanded, as we discussed, to include what they call as operation expenditures. And these are additional expenses that companies have had to incur the last 9 months because a lot of people are working remotely and people have had to subscribe to additional services in order to keep their businesses running. So a lot of this is cloud computing in nature, and also, services such as Assure provides. These types of services where people need it because of what's going on are all forgivable expenses. The other item they refer to as supplier costs. So if prior to the pandemic, you had to incur expenses to keep, that you had a contract for, and you maybe didn't need that, you're stuck with it. So you kind of stuck with it. You maybe never sold it, or it was perishable and it's spoiled. Not only do you deduct this and affected in your profit and loss statement, but it's also considered a forgivable expense, so that you kind of get your money back in terms of it being counted for forgiveness. The other thing is property damage that might have been incurred from some of the riots and public disturbances that occurred, the cost of any windows that had to be replaced, other things repaired, barricades, etc. And the other is social distancing costs and worker protection costs, the PPE, the PPPE, the PPE. All those costs can go to forgiveness as well. And on the next slide.
I think it's interesting when you do the math from the previous slide. I'll go back to it for a second. When you do the math on what you're going to get your loan for versus how many weeks you have to spend the money, it's almost unlikely you're going to even have to document any of these additional expenses. But it's clear that the government has really tried hard to step up to cover businesses that might be in these unique situations that kind of got left by the wayside the first time around. Is that how you think about it, Neil?
Oh, most definitely. They want, they want to make it easier for people that are legitimate businesses, and they want to minimize the fraud that went on during the first round.
Yeah,
right. Requesting additional documentation. So they're trying to do the right thing.
Yeah.
So we put together a list, Mike, of questions that were asked frequently. We never applied for a PPP loan in round one. Should we apply now? The answer is definitely yes. You may not have applied because you didn't find a bank in time. You didn't either know about the program. Maybe you thought your business wasn't affected. You didn't want to have your hand out. But in retrospect, if you think you should have applied and you didn't, you can now apply for round one and have the same rights and maximum loan amounts that the people received beforehand. If you were turned down for a loan in round one, this is the question: should we apply now? Well, I could tell you, we had a lot of people that came to us that were turned down once, twice, 3 times from different lenders, and we got them approved. And that's because a lot of lenders did not understand the rules, whether someone was eligible or not. They may have not understood all the FAQs. I mentioned FAQ 38 with respect to companies purchased subsequent to February 15th. There are other, let's say somebody came with 1,000 employees and they turned them down, and that's because the lender may not have known anything about the alternative standard. So this is all these things, or all these new rules for the last 9 months, is all temporary stuff that everybody had to learn, and not everybody knows everything. So there's no harm in reaching out to somebody to see if you could apply, even if you were turned down in round one. Do you need employees to be eligible? We know a lot of people personally, and it's surprising that thought they didn't qualify for a PPP loan because they didn't have employees, because it's called Paycheck Protection Program, and they don't give paychecks out. Well, if you're an independent contractor without employees, you're eligible. Has the SBA come out with additional guidelines regarding forgiveness? They will be coming out very shortly with a 1-page form, a quick and easy form for forgiveness for those that received PPP loans of 150,000 or less to save everybody time and expense of going through the forgiveness process. Here's another one we get a lot, and I'm sure you do as well, based upon what you told me, Michael. Are employee benefits included in the $100,000 salary cap? The answer is no. The $100,000 cap relates only to the compensation portion of the payroll costs. So you could have several people with more than $100,000, and you include the amount of the healthcare, retirement, and other benefits that they get as part of the overall cost in calculating the loan. So you're only going to back out the amount in excess of the actual compensation they get on a monthly basis.
That's a huge one where a lot of money was left on the table round one.
Yep. Then someone would ask, I have an entity with several employees, but I don't pay myself a salary. What happens? So this may be in the case of it could be whether a C Corp, S Corp, an LLC, where the business owner uses Assure for payroll, that people get W-2s and the 940s, etc. But for the ownership themselves, they don't take a salary. Instead, they take distributions. So in that case, the owner, you cannot use the amount of a distribution as part of the payroll costs in calculating PPP loans. Those with employees, you can only use the payroll information, which is the 940s and the 941s. So unfortunately, people that didn't pay themselves salaries are out of luck with respect to getting a PPP loan on their compensation. How does a PPP loan affect me personally? As long as you don't commit fraud, there's really no effect. There is no personal guarantee. There is no collateral required, and there is no credit check. So if you have no collateral, you're heavily in debt, you're still eligible. If you have a great credit score, you're still eligible. If you have a poor credit score in the 500s, you're still eligible. What is the difference, people ask, between a PPP loan and an EIDL loan? The EIDL loan is made by the SBA directly. You apply, you have to go to the SBA website to apply. It's a very easy process and application. For a PPP loan, you need to go to a lender or a bank or a non-lender that does these loans. Okay, and then people ask, where can we get one? You can get one at a bank or a non-bank lender, or we are a authorized agent for a number of lenders, and we process PPP loans as well. And as a shameless plug, we don't charge anybody for our services. And what differentiates us, we help people. We hold people's hand from step A to step Z, making sure you get applied, you get approved. Next slide, please.
Yeah, Neil. So that's it. Let me bring it home, and I'm going to put your contact information up to share with everybody just in a second. So this is normally we do these weekly webinars where we take topics important to small business owners to help them grow their business. Obviously, the last 9-10 months has been a lot of topics on how to survive your business in the face of a pandemic. But just a reminder that this is what Assure is for. So we provide payroll, human resources, time and attendance, HR services to help companies stay compliant, to provide scalable HR services in infrastructure that is a pay-as-you-go basis. So you don't have to invest all the capital to ultimately have an HR platform that you can recruit and find great talent to build great teams to grow your business. So with that, I'm sure we're gonna have more conversations on this topic. Neil mentioned FAQ number 38 that all of a sudden helped one of his clients in a big way. Over the next 24 weeks, money starts flowing in the next, call it 10 days, and then another 24 weeks of a forgiveness window, there's going to be a lot more information the Treasury and SBA publishes. I'm sure, Neil, I'm going to invite you back so we can unpack that information, especially when there's big material changes. But I really want to thank you. So just so everybody knows, Neil, doesn't pay Assure a dime for hopping on here and talking to you guys. We don't pay him a dime. Our only objective is to help you guys get the very best information you can. So if that means you take this information and go to your longtime trusted banking resource, great. Neil's happy to provide this information. But I will say, if you need help, much of what you saw today was screenshots from tools that Neil's team has built, and they really can kind of take you step by step and package all this up and kind of see around the corners, if you will, to help you get financing. So whether you use Neil, and leave his information up here if you want to write it down, or you go through your traditional banking resources, we're just hopeful that today's information was helpful to you. And we have recorded this entire presentation. It's going to be available on the website, so you can come back and reference it at any time. And with that, Neil, I want to thank you and look forward to talking to you next time.
My pleasure, Mike, and I look forward to it as well.
All right. Thanks, everybody, and have a great day.